Welcome to TheoTrade. This is Don Kaufman, June 17th, 2022, doing the TheoTrade weekend update. 15 minutes left inside of the trading week. What kills the markets first, inflation or the Fed? Obviously, the talk of the trading community, of course, is the Fed 75 basis point increase. But I got to tell you, by now that's effectively old news. The real news over here, some absolutely wild sell side activity yet again. I mean, it's just been just a wave of selling that has hit this marketplace. However, with that being said, I'm going to discuss in quite some detail on this weekend's update. There are some implications in some areas of the selling that are rather bothersome at this point in time. Yes, we'll discuss a little bit about that, the Fed versus inflation. I mean, right now we're just in a vice of a marketplace. I mean, there's just no easy path forward for these markets. On one side, you basically have inflation that's been running incredibly hot. On the other side, you have the Fed, and pretty much Main Street and Wall Street are caught right in the middle of that. I mean, there's no easy path forward for the marketplace. Unequivocally, I mean, today, if you take a look at oil is just getting demolished. This is actually good, not necessarily right here, right now, especially if you're long oil, it's not good, but this is good as in fighting inflationary pressures to see energy get crushed. Obviously, though, that is going to be down the road. The other aspect is, I mean, maybe a little too late. I don't know. I mean, oil's still trading almost 109 a barrel, which is rather extreme. So when I start talking about, inflation or the Fed, and what's really going to kill the market and talking about, no easy path forward, I think it's important to pull up the S&Ps and just examine not only some of the recent sell side activity, it's just no question. Come on, the last 2 weeks have been downright brutal. But as I am going to point out in a few moments, as I said, some aspects of this are rather bothersome. There's obscure volume going on inside of the SPX. There's low volatility and heavy selling. We're going to examine that. There's, issues with SKEW, and this definitely equates to, well, even more issues moving forward. But before I get there, I do want to discuss, so some heavy selling going on inside of the marketplace. If you're into the SPX and you understand a little bit about expected move, there's an interesting facet about expected move, and that is, take a look at the last 2 weeks of trade. So the previous week, a major breach of expected move to the downside. In fact, the previous week we were 2 times the expected move, which is the infamous 2 sigma move. This week, very, very similar. And now it's not over. I mean, listen, there's still 10 minutes left, but we're not quite down to a full-blown 2 sigma move, but unequivocally, we're going to close outside of the expected move. Right? There was a previous week before that, there was nothing. The week before that, we actually had a 2 sigma move to the upside. The point of all of this is inefficiency, reigns large inside of the marketplace. Effectively, what I'm saying on this particular front, and it's critical, like you don't have to read into this, it's just absolutely critical to understand, the marketplace is not getting it right, which means that the options marketplace, and the biggest options marketplace pretty much in the world, I mean, look at this. This is the SPX, and you open up the option statistics, you see, 2.2 million contracts, and obviously it's an options expiration here, and it's a triple witching, but a huge number. 2 million contracts trade of a $3,700 product. The notional value equivalency is, just again, tens of billions of dollars in here that are going through in the SPX, and they're not getting it right. And that's one of the critical takeaways over here, that the marketplace is actually a period of complete and total flux, where when I say, we're not getting it right, what it amounts to is you're actually seeing things break a little bit in terms of option pricing. And when I say that, you're like, well, I don't necessarily get it. And let me put it in these terms. Okay. The market this past week was expecting approximately $131 move. Now that's higher or lower, right? So it's plus or minus. How much did it move? Well, we started roughly at 3,900. Here we are at, 3,670. So huge by huge. Tried for the corner and missed. So, obviously we're not quite double. We did touch down to 2 times the expected move, but you can see we're way outside of it. But what people don't recognize, they don't rationalize. So when you go outside the $130, move, who cares? I'll tell you who cares. Okay, there's billions of dollars resting on the fact that we're supposed to be inside this expected move. So the moment you come outside the expected move, it causes the entire marketplace to hedge in the direction of the move. And it equals it's like saying the whole marketplace got it wrong. If the standard deviation was 131, and all of a sudden, you smash through it to like a 200-point move, which is exactly what you're seeing in this particular case. It's a little bit more than a 200-point move, right? You see this 200-point move to the downside, and you're like, how could they get it that wrong? The question is not how can they get it that wrong? It's how can it happen 2 weeks in a row? Then we had a bland week, but really 3 out of the last 4 weeks. And what you're seeing, as I said, okay, it's the market starting to rip apart a little bit at the seams, and it is absolutely bothersome. And that actually starts to go into my statement here where I say, there's no easy path forward. I think everybody gets that. On one side, you have inflation. It's running hot. It better cool down because here comes the Fed. That's not an easy path. The Fed's just going to be driving rates and quantitative tightening, and here they come, right? And eventually they'll pause and everybody go, it's a relief. What's going to be left to the marketplace? You have to realize how early on in the whole cycle of this. We're talking about 2% inflation. We're at 8.6%. Again, it's bothersome. It's worrisome. But when I talk about the Fed, breaking things, not necessarily like the S&Ps and the market going down. When I'm talking about the Fed breaking things, that's when you start to want to look at like financials. Look how wild the financials have gotten on a year-to-date basis. They were actually, kind of coping with the risk until the last 2 weeks. So they're down 21%. How does that compare now to the QQQ? The QQQ is actually off 31%. But the financials have played some catch up to the downside, if you will. I think that's critically important to understand. When I'm starting to talk, though, about they're going to break things, what else may break? I mean, we had periods of time over, the last 2 weeks. Okay, phenomenal bond selling with the S&P selling off. That's not going to be comfortable for anybody. Obviously, the bonds rebounded to a degree. But again, this is where you'll start seeing, okay, markets in panic mode because, again, when risk starts to kind of hit the proverbial fan, we start getting like yield curve inverting, things are going to start to break. Financial markets, they're not meant for this. Not meant for what? Jamming rates up 75 basis points. They're not meant to do that, okay? I mean, sequential, every 6 to 8 weeks, seeing rates jump up again in the Fed fund futures, some wild stuff is going to start to occur. Everything, we're going to be watching everything from volatility into the repo markets, okay, to what some of the banking institutions are going to do. And this is where I really start to pay attention to stuff like JP Morgan, okay, Bank of America. You realize if their trading operation gets on the wrong side of the yield curve, it is going to be inflicting incredible amounts of pain. Take a look at like the XHB. You thought the sell side was over until, again, okay, this thing just got crushed in the last 2 weeks of trade. That's, of course, the Home Builders ETF. So that's something that you're going to hear me say a lot in the near future. The Fed, by raising 75 basis points, doesn't matter what you think about it, okay, that is a statement unto itself. They're actually saying, we are willing, okay, and able to break stuff. And the stuff they're breaking right now is clearly, right, the S&Ps. You're seeing the bond market all over the place. But here's the problem that I have right now. I, have been and continue to be a premium seller. And what that amounts to is I will go out and I will use, at TheoTrade, our Ultima strategy, which is actually selling a little bit of back month premium, mitigating risk with some inside hedges, and moving forward. But I would be remiss not to mention, I'm actually grossly right now under allocated. And I don't mind saying that. I'm using what I kind of term alligator arms, which is, effectively I'm not going out there and like loading up on positions. And I think it surprises a lot of people like, come on, man, this is your time. We're selling off huge. We are. There's low volatility on heavy selling. And everybody, they're talking about it on all these different boards and so forth. Oh, low volatility and heavy selling. Oh, it's like everybody's expecting selling. I completely, and vehemently disagree. I think it's ridiculous, You haven't seen anything yet. You just haven't seen anything yet, The market hasn't broken, One of the things that's intimidating to me as a premium seller, listen, I've seen this movie before. I've seen the movie before. The S&P is just sold off. Here, let's get crazy. There's 1, 2, 3, 4, 5, 6, 7 trading days. Just the last 7 trading days. We came off literally, 4150. Today we touched down into 3650. So, all right, let's just put it at a flat 10% decline inside of the marketplace. And you're going to tell me that the VIX doesn't get above 34? It's not about the VIX at 34. I don't care about the VIX at 34. It didn't get above any of its previous highs. Like, it's not feeling the fear. Nobody's out there reaching for puts in the SPX like they're on fire and going down with the ship. But you have to understand, and again, this is where, is there fear and loathing? No. Are they just what? I'm just disgusted with the marketplace. I'm going to sit here. If there's capitulation and they're disgusted with the marketplace, you would feel it inside of VIX. And you simply don't. And there's so many areas though, that also don't feel it. So it's not just VIX, and like VIX doesn't exactly do it for me. And I always say that, but like look at VVIX, the volatility index. One of the crazy things is I looked over at VIX itself, and I went over to the option statistics here in thinkorswim. So 500,000 contracts trade, which is pretty big. It's 3.3 times, which it should be. There should be heavy volume in here. But let me actually elaborate exactly what I'm talking about. Like today, there was a point in time where this marketplace sold off. Look at this. Only 400,000 calls, have traded versus 100,000 puts. Now you're like, whoa, it's way more calls than puts. Way more calls than puts. Apparently, though, people aren't really buying those calls, because if they were buying the calls, what would happen to VVIX? You think about this. If there is like, this fit of rage of buying calls, volatility in the VIX would go skyrocketing. It's anything but. Volatility in the VIX is actually down today. Down, what? It's to the 110 region. That line is actually turned the VAMA zone, which is, chaos happens in the VAMA zone. 1 minute left to play in the period, but the S&P is going to finish the week unchanged today. But think about this for a second. There's no fierce movement in the VVIX. And there was a point in time today where the S&P's touched all the way down to, 36, 39. Look, what did the VVIX do? I think it moved. It's been going down the entire day. It doesn't make sense. I don't like it. I don't have to like it. I don't want to like it. In combination with that, low skew. The skew still remains, in my opinion, inordinately low. For those of you that have no idea what skew is. Skew, deals. And I'm going to change the style over here, and I'm just going to put it to an area chart. So skew was up here at 146. Skew is down here now at 122. Skew is only calculated once a day, but skew actually deals with out of the money put implied volatility versus out of the money call implied volatility. And I'm going to tell you something really crazy. Right now, you would think everybody needs a put. I need a put. You need a put. The whole world needs a put, but they don't need puts. Because if they did need puts, you would see skew completely jacked up. You'd see an implied volatility jacked up. And I got to tell you right now, 2.3 million. There's the closing bell. 2.3 million contracts traded in the SPX today. You're like, what do you care? I'll tell you exactly why I care. Normally, the number of puts, versus calls, usually there's double the number of puts trading versus calls. It says it right here, the call sizzle, 8 times the norm traded today versus only 5 times the norm in put. Right? What's up with that? What are people like trying to handicap a rally for Tuesday? By the way, the market is closed Monday, so maybe they're trying to handicap a rally for Tuesday. I don't think so. It just doesn't add up. Nothing adds up over here. I'm telling you, on one hand, what's going to happen first? What's going to kill the market first? Inflation or the Fed? And I'm talking about the Fed's going to break things, and we see these huge breaches of expected move. And all of a sudden you start looking at like volatility, you're like, wait a second, that doesn't make sense. Like, and then I say, like, oh, I've seen this movie before. I have seen this movie before. I've actually seen volatility almost feel like it's being suppressed. And what that is just trading firms coming in there. Trading firms are like, woohoo, higher volatility. It's been so long since we've had volatility, okay, for such an extended period of time. I actually fear that there's not only retail, but there's professional firms coming in here and actually selling volatility into this. And they might actually be selling volatility into what is an absolute onslaught of risk coming. And this is where people go, whoa, wait a second. You just say risk is coming? I thought you just said the marketplace is like a tidal wave of sell side activity here. The S&Ps are down 10% in 7 trading sessions. We may not have actually seen the risk. It's the bottom line. Okay. I mean, listen, I don't have that great of a feel for it right now. I don't think anybody has a feel for volatility like this, but I'm going to tell you right now, stuff on my screen doesn't look right. Okay. If it doesn't look right, I'm not going to step in and sell a ton of premium. I am selling some premium, but you better believe I'm actually doing it again. All right. With really, really, okay, controlled size. My allocation is small. Onward and upward, yields inverted, bonds tanked and rebounded. There's nothing to say on this front other than, as you guys know, I actually did the yield spread trade, and it was wildly successful. Most of it to which I had recently pulled off. Okay, so for those of you that are in the yield spread trade, the 2 and the 10. So I actually was long the 2, short the 10. Again, long the 2, short the 10. I pulled most of it off. I mean, we're still up substantially in the contracts that we have left, but I pulled off most of the 2 and the 10. I would look for the yield curve now to continue to kind of flux and invert, and that is, it's the 2-year coming over the 10-year, which is actually also a sign of recession. Enough said on that particular front. The bonds are going to be interesting to watch in the near future, because if the bonds are actually rallying, that's taking yields lower. But the short term like the 2-year, I still think they have considerable room to the upside. That is, the yields have considerable room to the upside over here. All right, onward and upward from there. Energy. Okay, let's talk for just a brief moment about energy, because today, the entire S&P, if you look at the marketplace, it kind of felt like the S&Ps wanted to rally today. It did. The Nasdaq did rally. There was no way that the S&Ps could rally today. This is the first time in a long time we've had to have this discussion. The XLE, which is the energy sector, is down almost 5.5%. You do realize the energy sector used to be a little peanut. It was just a little peanut in the last couple of years, except that little peanut now means a whole lot, because ExxonMobil is now a mega market cap. I mean, ExxonMobil is almost a $400 billion company. You know, Chevron is right there with it. ConocoPhillips is over $100 billion. And these companies didn't matter until they do. And all of a sudden, this was a smaller sector inside of the S&P 500. But that sector, at one point just 2 weeks ago, was up 60%. It's still up. I mean, by the way, look at this. It was up 60%. Now it's only up 28%. That's a wild move. I am short the XLE, and I'm still taking a loss in the position, but I'm okay with it. See, it's a better loss than it was at this point. Anyway, the reason I'm bringing it up, there was no way. Like, people were talking in the in the TheoTrade chat room today. The market's going to rally. I'm like, listen to me. You can't rally when a major sector is down. Okay, 5.5%. It ain't going to happen. It's impossible. Okay, then you also had what, like Walmart down almost 2%, Costco's getting hit by 1%. There's major sector weight today that was never going to let this marketplace rally. Yeah, the Nasdaq rallied a little bit, but that is it. It's critically important to understand, though, energy, in my opinion, it sees the economic slowdown coming. That's what this is about. Nothing more, nothing less. All right. Onward and upward from there. I did want to make a quick mention about crypto, because not only do I follow crypto, okay, but I do some trading over in like Bitto from time to time. This product is just getting decimated, right? But Bitcoin, there was actually a discussion I was having a little bit earlier today with one of the representatives, Frank, from the small exchange. And we were talking a little bit about crypto in general. One of the things I'm really bothered by, we need more derivative products, okay, more futures contracts inside of stuff like crypto. One of the things that people do not realize about crypto, and everybody's been asking me throughout the course of the last, 2 weeks, as crypto is just getting annihilated, they said, well, what do you think the bottom's going to be? And I'll tell them, okay, in my honest opinion, when you talk about these different coins and crypto in general, one of the biggest issues with the entire structure of the crypto marketplace is you can't go out there, okay, and proactively short the contracts, because they're not contracts, like it's actual coins. And this is where people that are into the crypto side of the business, they argue, no, you can go to this exchange and you can short. Okay. All right, listen to me. You can't go in like a futures contract, here. You can buy or sell it immediately, even this crypto contract. But nobody trades these Bitcoin futures because they're too big. They're ridiculous, right? These are 5 coins. So nobody really trades them. And the crypto market's still brand new. But when people keep asking me about price stability inside of the crypto market, and more specifically in Bitcoin, as this market starts to tank, you do realize that if traders were short in Bitcoin, they'd be making money right now. But if traders were short in Bitcoin, Bitcoin would have much more stability, because how do traders get out of short positions? How do they get out of short positions? By buying. The shorts can actually create stability in here. So every time I've heard like Elon Musk go, I can't stand the shorts. Really? Because they're the ones actually causing, right, stability to price action. There's one other aspect that bothers me substantially, okay, regarding the crypto market. You do realize that everything is in a public ledger. That public ledger, if you're, talented, couple of algorithms here and there, you can actually go back through. You can actually aggregate, right? Tens of millions of trades. It's been done before, and you can actually figure out, generally speaking, for like the last 6 months, last 10 months, I don't know, last 2 years, the average price, okay, that where people may have bought, for instance, Bitcoin. That is extraordinary and dangerous, because at that point, if you realize that the average price that everybody paid over the last 18 months is 20,000, and I've seen quantitative firms do this, the second we get under 20,000, this is going to turn into a slaughter fest, just an absolute slaughter fest. So there is critical stability issues, right? Crypto stability has evaporated. One, because there's no, like, again, somebody has to advocate for, like, you want shorts in the marketplace, not because I'm a guy that likes to get bearish. Listen, if I want to get bearish in crypto, I'll sell, Bitcoin futures. I want to get bearish in here, I can use BITO. And I have used BITO, and it's been a spectacular ride. But the truth be told, the coins themselves, it's not a fair and two-sided market. I can't buy it and sell it instantaneously, all right, like I can, for instance, S&P futures. We like literally need more derivative contracts in there. One last word over here about some of the metals. I like them, okay? What do I mean I like them, okay? I like it. I like gold. Look at gold, okay? Look at silver. Man, are they holding up well? What do I mean by that? I mean, look, they're down a little bit over here. They're holding up incredibly well in a dollar that has exploded higher. I am very bullish in the near term inside of the metals, only because, can you imagine, like, if they didn't have the pressure from the dollar, these metals would have gone a lot higher. By the way, there goes the idea of metals being a good inflation hedge, because the biggest inflation may actually be behind us, and metals did absolutely nothing. But at this point moving forward, okay, metals are holding up in a strong dollar, which is an incredibly, incredibly bullish sign at this point in time. All right, in summation over here, what kills the markets first? Inflation or the Fed? Frankly, doesn't matter. What does matter, though, right now, okay, the lack of volatility, the lack of like engagement to SKEW, things like VVIX being a little too low, the odd volume, obscure volume, if you will, inside of the SPX, things don't add up. This is not a happy-go-lucky marketplace right now. There are some aspects of it that are absolutely unequivocally broken. One of which, again, the SPX, 2 weeks in a row, almost a 2-deviation move, which brings me to a final thought. Now, the SPX has not officially closed. We are coming into a 4-day trading week. A reminder to each and every one of you, Monday, equity and index marketplaces closed. Futures will have limited trading hours, of course, but our expected move, all right, in a 4-day trading week is $122. Again, like, you look at what just happened. We had this $130 expected move from last week. We shattered it. It's like a 200-point move, right? And all of a sudden there's another 4-day trading week, and they're like, 120. I don't like it. There is no way that I want to go out and sell shorter duration options. I'll step up to the plate and sell some longer duration stuff, but the vol skew is incredibly, incredibly flat. People, we got to let this evolve right now. If you want to allocate, let it evolve. there is still a tremendous amount of risk. And I would agree with each and every one of you if you're like, oh, we're going to have a rip your face off rally. Maybe early in the week. But I am telling you right now, the evolution that has not occurred, sooner or later, for all of this sell side to be over, you are going to have volatility ripping. And that is something that has not transpired at this point in time. Thanks everybody for joining us here at TheoTrade. Have a wonderful holiday weekend, a wonderful Father's Day. Bye-bye.